Imagine this. The former chairman of India's largest private sector bank resigns, raises ethical concerns, questions the bank's governance, and the matter grabs national headlines. Investors become nervous. The bank loses significant market value. Questions arise over corporate governance, board oversight, and the future leadership of HDFC Bank. Then, after nearly 3 months of legal examination, two independent law firms review thousands of documents, interview independent directors, speak with senior management, review board and committee minutes, and finally conclude no contemporaneous evidence supports the allegations. So, did HDFC Bank really receive a complete clean chit? What exactly were the allegations? How did the investigation proceed? Why did RBI continue supporting the bank's leadership? And what lessons should every investor, director, company secretary, and corporate governance professional learn from this episode? Today, we analyze every development from the resignation to the final legal report using facts, timelines, governance principles, and official disclosures. Stay till the end because this case contains valuable lessons on corporate governance, board documentation, whistleblower allegations, independent legal reviews, and regulatory oversight. Background. How did the controversy begin? Before discussing the legal report, we must understand why this controversy started. Former chairman Atanu Chakrabarti resigned in March 2026. While resigning, he expressed ethical concerns regarding the bank's practices. Although the resignation letter attracted enormous media attention, it did not contain detailed documentary evidence establishing governance failures. Nevertheless, because the allegations involved India's largest private sector bank, the matter naturally became significant for regulators, investors, analysts, and the market. Questions immediately emerged. Were governance standards compromised? Did the board ignore concerns? Were committee records manipulated? Was information suppressed? Or was this simply a disagreement between the chairman and the board? These questions required an independent answer, not speculation. Therefore, HDFC Bank appointed two reputed external law firms to independently examine the allegations. What exactly did the law firms investigate? This was not a superficial review. According to the bank, the investigation extended over approximately 3 months. The legal teams examined board minutes, committee minutes, agenda papers, supporting documents, internal communications, official records, additional documentation, interviews with independent directors, interviews with senior management, thousands of corporate records. Importantly, the law firms repeatedly requested an interview with former chairman Atanu Chakraborty as part of the review. However, according to the bank's disclosure, that interview ultimately did not take place. Therefore, the legal review relied upon available documentary evidence and interviews conducted with relevant individuals. This distinction is important because legal investigations generally focus on evidence recorded at the relevant time, not later opinions or public statements. Key findings of the legal review. After examining the available material, the external legal review reached several important conclusions. Finding 1. No contemporaneous evidence supported the allegations. The law firms reported that board minutes, committee records, meeting materials, and communications did not substantiate the concerns raised. Finding 2. No formal dissent was recorded. The review examined whether any objections had been officially recorded during board meetings. No such supporting records were identified. Finding 3. Governance processes appear to have been followed. According to the bank's filing, matters raised at board level were handled through prescribed governance processes. Finding 4. No material governance lapses were identified. The legal review reportedly concluded that there were no material deficiencies supporting the allegations contained in the resignation narrative. Finding 5 independent directors were interviewed. The review included discussions with independent directors and senior management to understand the decision-making process beyond documentary records. Overall, the legal review concluded that the available evidence did not substantiate the allegations. RBI's role and the timeline. Understanding the sequence of events is equally important. March 18, 2026. Former chairman resigns citing ethical concerns. March 19, RBI appoints Keki Mistry as interim part-time chairman. March 23rd, board appoints independent external law firms. June 18th, RBI approves extension of the interim chairman. June 26th, external legal review concludes with findings that no contemporaneous evidence supports the allegations. The timing suggests that regulators allowed an independent review process before major governance decisions were finalized. Corporate governance lessons. Regardless of individual viewpoints, this episode offers important governance lessons. Lesson 1. Corporate allegations should be supported by documentary evidence wherever possible. Lesson 2. Board minutes and committee records become the primary evidence during governance disputes. Lesson 3. Independent external legal reviews help strengthen stakeholder confidence. Lesson 4. Regulators focus on documented facts rather than speculation. Lesson 5. Listed companies should maintain robust documentation because governance decisions may later be scrutinized by regulators, courts, investors, or external investigators. What does this mean for investors? For investors, the legal review reduces one important uncertainty surrounding governance allegations because the review reportedly did not identify evidence supporting those claims. However, investors should remember that investment decisions should never depend on a single news event. Always evaluate financial performance, asset quality, management execution, corporate governance, regulatory developments, long-term business fundamentals before taking any investment decision. Conclusion. This episode demonstrates how corporate governance works in practice. Serious allegations were raised. An independent legal review was commissioned. Documents were examined. Independent directors were interviewed. The regulator monitored developments. Finally, the conclusions were disclosed to the stock exchanges. Whether you are an investor, company secretary, chartered accountant, lawyer, director, or finance professional, this case highlights one fundamental principle. Good corporate governance is ultimately judged by evidence, not assumptions. If you found this analysis useful, don't forget to like, share, and subscribe to Suffer or Seek Knowledge for detailed company news analysis, IPO reviews, regulatory updates, Companies Act amendments, corporate governance insights, and practical investment education. #Disclaimer. The content published on Suffer or Seek Knowledge platform is intended solely for educational, informational, and knowledge-sharing purposes. The views, opinions, analysis, and discussions presented on this channel are based on publicly available information, official disclosures, applicable laws, regulations, financial statements, annual reports, stock exchange filings, and other reliable sources believed to be accurate at the time of publication. The information shared on this channel does not constitute legal, financial, investment, tax, accounting, or professional advice, nor should it be treated as a recommendation to buy, sell, or hold any security, financial instrument, or investment product. Company analysis, business news, stock market discussions, IPO reviews, regulatory updates, and corporate governance topics represent the creator's educational interpretation of publicly available information. Viewers should independently verify facts and consult qualified legal, financial, tax, or investment professionals before making any business, legal, or investment decisions. Investments in securities and financial markets are subject to market risks. Past performance does not guarantee future results. The creator and Suffer or Seek Knowledge shall not be responsible for any direct or indirect loss or damage arising from reliance on the information presented on this channel. This channel is independent and is not affiliated with, endorsed by, or representing any company, stock exchange, regulatory authority, government body, listed entity, financial institution, or professional organization, including but not limited to SEBI, MCA, RBI, BSE, NSE, or any other regulator. All trademarks, company names, logos, and brand names mentioned or displayed belong to their respective owners and are used only for identification, commentary, reporting, criticism, review, or educational purposes where applicable. By viewing this channel, you acknowledge and agree that the content is intended for educational purposes only and that you are solely responsible for your own decisions and actions.